bull market still. Oh, yeah, we'll do that.
Oh, I thought we were doing antennas.
No, I don't know what.
It's
what
Easter.
are you doing, Daniel? Yeah, that looks like an alien. I'm not sure with the moving around stuff.
That's good. That's good.
All right, that's the best we could do with representing a bull. All four of us, we're sort of being animated with the bull market. It has happened for so long. What can you say? It'll just never stop. So now if we start saying it definitely will never stop, then it will. That's the way it's worked this last year.
No, the question is, are you measuring how far it's moving? If you notice, what we're seeing currently is that it's maintaining its speed and course. If it ever slows down, start panicking. If it speeds up more, start panicking. But as long as we maintain speed and course, it'll expand indefinitely.
All right, and that's our show. Appreciate everybody coming. We'll be back next week. We jumped into really good content right off the bat. Let me announce everybody. I'm Darin with. He'll have more though. He'll have more. Stick around.
So I think Royce is bullish.
You think?
No, I gave all three options.
Yes, it's about
and
how
two
long.
of them was actually making it fall. So how am I
long? It's about endurance. That's what I was told.
I just remember old Yogi Royce. That was the perma bear.
I'm still perma bear.
Yeah.
However, I have to listen to my indicators that are be wrong. So there you go.
Eventually, it'll pull back some.
The numbers don't lie.
Yes.
All right. So let me get everybody introduced here. I'm Darin with Arbitrage Trade, and this is After the Bell. It's Wednesday afternoon. And my guests are Daniel Hopwood, who has his own fan again in the background. And he always wants
his only fans. Don't worry
his
about
only
it.
fan. Right. You'll have to pay for that fan if you want to see more. We've got Josh in the bottom left. JP.
I'm back.
And we got Royce, who is not talking. If you saw last week, there was him talking, and then the voice came afterwards. It was like a Japanese karate movie or something. It was Bruce Lee or something. So it looks like everything's going good this week so far. Now, by saying it, something probably won't. And that's Quanticus Maximus. Right. Yes, there he goes.
Let's go.
Who was that guy that did all the voices, the little noises? He used to do that.
He's coming back.
Oh, Winslow.
He's coming back for Spaceballs 2.
That's right. And hopefully Mel Brooks will last. I mean, he's 99 and still hanging on. So
he's more than hanging on. He's like Dick Van Dyke. He's going nowhere.
Gotcha. All right. Before you guys say something, let me give disclosures here too, including all the bull market talk in the beginning, all that stuff. We are not financial analysts. We are here just for educational and entertainment purposes only. But we know a lot, and we have good opinion.
I'm going to have to refute that. We are financial analysts. We're not financial advisors.
Yeah, that's a good point. We're not licensed, although we are. Some maybe, I don't know. All right.
Some people have letters behind their name and tests in front of on their resumes, but we don't talk about those people, at least not in polite company.
That's right. That's right. I don't like the letters.
Only thing.
We need to turn the fan off. I don't like.
Yeah, that's right.
Just tell me.
That's right. No, we're glad you have one fan. That's great. We appreciate that. All right, let's talk about the markets. I've got the numbers like I always do. A little bit changed since now you're back over there. It changes now again. So the Dow Jones was flat. S&P 500 was up to 67.53, which is up over 0.5%. Nasdaq record over 23K now, and plus 1.12%. The dollar is up 0.3% to 98.57. I was waiting for you to say something. I knew it. WTI is up to 62.40, which is just 1%. Gold is the crazy thing that's going on. It's over 4K, and it's running past 4K. It's at 40.62, which is up plus 1.44% just today. Silver, I have to add it because it's going crazy too, up 1.8% to 48.37. Know your precious metals. We got the 10-year that is 4.12, which is just basically flat. It's down 0.1%. And then Bitcoin did cool off just a little to 123,350. So that is your update on the numbers. I do this to also just tell Royce because I mean he's too busy with all these business meetings to even to even keep
talk about it.
That's right. So yep. So we kind of we covered the market, but you have a Paul Tudor Jones comment, Daniel. What's this all about?
Yeah, so we had.
I don't know who is Paul Tudor Jones. For those that don't know.
I mean, he was one of the greatest traders of all times, right? One of the big hedge fund managers, probably became popular with people like Stanley Druckenmiller from like the Market Wizards book. So when he talks, I think Darin will argue the other side of it, but people often listen. Yeah, well, you can tell me what you think afterwards, Darin, but so this week, or like partially last week as well, we had some, big respectable people kind of come out and say that more or less that AI is in a bubble, not in the sense that it's going to pop tomorrow or anything, but that it rhymes of history. So Paul Tudor Jones said, all the ingredients are in place for some kind of blow off top. Will it happen again? History rhymes a lot. So I would think some version of it's going to happen again, more potentially explosive than 1999. We had Jeff Bezos say we're in an industry bubble, and the Goldman Sachs CEO, David Solomon, note that equities could face a drawdown. So, there's definitely, I think even Sam Altman has said that, things are kind of running hot in the space. So, there's a lot of sentiment that as things are continuing to grow and the numbers are ballooning in AI, that the speculation bubble is, kind of here and is starting to resemble the past.
You know what I say to that? Hogwash.
Well, now it's some of the other comments you put down there though, saying like between now and 2 years from now, it's the speak. It's the way that these guys speak. They say it's going to happen, and they're talking about 2 years from now, just so retail will invest wrong, so that they will not listen to the 2 years from now. They think, oh man, in the next month I better take advantage or take profit because it's going to stop. So it's all about timing, just like anything else. When these guys make these comments, then just like you remember, who was it that kept saying that we got a hurricane in our financial system, and it was a bank president. I forget which one.
A lot of people don't get in trouble for that.
I think it was Diamond. Jamie Dimon said that, kept saying there is a hurricane coming, and we're still waiting on that hurricane. It just keeps going up. So I mean, you just really can't listen to these guys because it's not what they're saying. It's what they're trying to make happen more than anything else. And I think Royce has said in 2 years, possibly a year and a half, whatever. And that I think you had one of them. Let's see, who was it that said a couple of years? Yeah.
David Solomon said the drawdown would be within the next couple of years.
Exactly. So between now and 2 years from now. Okay. Thanks, David. Appreciate your advice.
Well, that way he can claim later that he was right.
Exactly. That's what they exactly. If you give them this, it's going to fall somewhere in here eventually.
And so you literally have 24 months to be right.
So now, Royce, you might take offense to what he said.
Oh, what do you say?
It's Jeff Bezos, because he, according to Daniel, he said that AI is an industrial bubble. And I know you've been talking about industrial revolution, so you might want to talk about what he had to say about that.
I personally think that it's scare tactics. Whenever you get information and you didn't pay for that information, don't trust that information.
Exactly. Amen.
There's a reason that the people who are in charge will allow media to manipulate the market. It's like, why don't they get fined for that? Because they're actually helping them, and kind of like the Carabinet, nod, pull in the ear.
Wink, wink.
Hey,
go English on that one.
It won't help you. It can't help you. And because of that, I honestly think that it's not an industrial bubble. I honestly think that we are heading higher, not lower, and basically maintaining speed is the main thing that everyone should pay attention to.
Right.
As these stocks take off, like Intel, Nvidia, AMD, you know, Marvel, Verizon, T-Mobile, all these telecommunications, everything that's in like basically in my data center drop list takes off. Oracle is in that list. Tesla's in that list. That's a pretty hot list. Anything that's associated with AI, people are going, oh, let's switch here. Let's diversify here. We're giving you information, but we're also backing it up with numbers. I just want to say, we follow the market. We're not trying to lead it. But when everyone tries to naysay and say, oh, this is it, and they're being very speculative, and the scare tactics, they're getting old. I'm done with them. It's like
I said, it's Jamie Dimon did that for a while.
Yeah.
And I thought about when you said the whole well, I keep thinking of Benny Hill doing nudge nudge wink wink when you say that. You referred to somebody else, but it's like the nudge, nudge, wink. Yeah. And then just to kind of get off of this real quick is since it is karaoke night, I'm preparing you guys. So when he was talking about Paul Tudor Jones, I was thinking that he could like do a Prince song and say the market's gonna bust like it's 1999. Okay, I'm done. And you're welcome.
You reached very, very far. That wasn't even that reached so far. That was almost a reach around. What are you doing?
That was
and
painful.
there goes the rating up to R. From Pete.
I'm just saying. Hey, got some color in his cheeks up there.
Yeah. Oh no, that's just the lighting. That's all.
Okay.
It keeps changing. All right. Now we've had this conversation though, and we might also jump into it. I don't see it further down. About speaking of reach around, let's talk about circle around and how these companies are basically giving money to other companies, especially NVIDIA, financing them, giving them money to buy their product back. So just explain this circle that's going on there, Daniel. We'll let Josh also talk about it because we've all been talking about it in chat this week. About how it's just a big circle. They just keep funding each other so that they'll pay for each other.
That's how money works, right? You create goods, you sell stuff, you buy stuff with the stuff that you sold, and
it's not quite this tight though, Royce. It's like
I don't know.
But NVIDIA was accused of doing that before they even made it big. Is that they were giving people a lot of money to jumpstart them. And so they would be given money by, let's say, Congress in that bill. And then, hey, I just got these billions of dollars. Now I'm going to give them to you with the wink, wink, nudge, nudge of you're going to buy my product right back when I give it to you. So, I mean, that's kind of what we were talking about all week is it's a very tight community. You remember when the White House had everybody, all the tech people in together, the big old round table they had? Yeah. I think things were discussed.
My thing is, if you don't let them talk to each other, how do you expect the bubbles not to burst? Things gain momentum as you cooperate. If you don't cooperate and you fight the system, then you aren't invited to the table. You aren't invited to the party.
I get that for sure. I mean,
so it's like, okay, like for example, the .com bubble burst not because there weren't a whole lot of fake guys out there saying, oh, we're going to be rich. Let's put up a website. It burst because there was not enough infrastructure between Cisco and the rest of the world to support the internet and the traffic. And so consequently, the network was getting slower and slower and slower, and people weren't willing to wait. So it burst. But if you see that that's happening, go, you know what? Let's give Cisco some money so they can upgrade their backbone so we all can win.
What I can say, and of course we do this, we obviously take different positions no matter what we believe. Just for fun, but one of the words that we're definitely not going that route. But the word kickback certainly comes to mind, and that's all. I'll just leave it there. Not circle jerk or reach around or whatever it was that you guys were saying. The Catholic. Yeah. Royce, he's frozen now. No, he's not. Okay, he's moving. And then there was silence.
Oh,
okay,
no.
let's get
There's
that
gonna
paywall up.
be retribution. Justice demands retribution.
Ouch! Ouch! No justice, no peace. Josh, JPM, let's hear your comments about the possible circle that we're doing or not.
Well, it's really more of a, I mean, I was kind of going off what Daniel was saying about you got all these talking heads that are kind of I don't want to say like dissenting or naysaying. They're just kind of, and it's not really that they're trying to scare. It's not like a scare tactic. These are not, because everybody if you look at what they're saying, yes, we're going to have a correction, but we're going to have a correction like 2 to 3 years down the road. Like they still, while all of this is transpiring, they still need buyers. So they're not saying that it's going to hit the fan now. They're saying, yeah, there's going to be something that's going to happen, but you don't need to worry about it because that's years down the road. Like, let's look at what's happening. Let's look at what's happening right now. So I think all of what we are saying, they can be true at the same time. Like we can say that, yes, there is a bubble forming. I mean, I don't know how, I mean, I know Royce keeps saying it, but even Royce is saying like that there is a bubble forming. Like there are no ifs, ands, or buts about it. I mean, you've got way too many people that are just going on status quo, and everybody just like, that point that Royce made months ago, where he was like, I start to worry when like my parents start to get on board. And I think that we haven't hit that point yet because they're still, they're all like, well, we see bubbles. We don't want to go. We're not ready to enter that whole thing. But I do think that, to that point, you can continue to run it hot for a long time. I mean, we've all kind of come to the consensus now that we're a few years, it might be a few years away. 2026 might not be the year. 2027 might not be the year. It might be further down the road, barring some kind of catalyst that accelerates the bursting of the bubble. But what's really going to, I guess what really scares me about the whole, that kind of thing about how all of the incestuous funding where you've got NVIDIA giving kickbacks to Oracle, giving kickbacks to Microsoft, that it reinvests into OpenAI that promises to fund NVIDIA to buy their chips, and then, you've got all of these like private equity firms and investors that are funneling money into that whole vicious cycle. Like, what happens when the money runs out? Because these are not insignificant sums, and all of these companies are not operating in the green. Like a lot are in the black. A lot of them are still operating in the red. Like they're continuously taking losses hand over fist. I mean, I think they made the point of it was like, they invested $4.5 billion versus only profiting $2.5 billion. That's like a $2 billion loss. That's going to, and that's not an insignificant number. Like eventually the liquidity is going to dry up. And when the liquidity starts drying up, that's when things are going to get scary, and it's going to get really scary really fast. You're going to start seeing like multiples start to contract, and all of these profits and, P&Es that are at like 150x. People are going to start looking less at what you're promising and more of what your profits. Like they're going to continue, that's fundamental. That's investing 101 is eventually the speculation runs out, and then we have to start actually getting a return on our investment. And so I just kind of think at this point, we're not there yet. We are, but it just depends on, are we getting there slow and steady, or does the pace change? And if we get there too far, too fast, or if we stall out, then that's when the red flags for me personally, like that's when I'm going to start, okay, let's pull back, sit on the sidelines. And even now, I mean, even some of the things that are happening along the way, like take some off the table. You can take 50% off. You don't have to be full on in the market. Like you can take, cash is a scary and, seemingly scary investment because most people don't think that you get a return on it. But at the same time, cash doesn't lose. Yeah. I mean, there are other vehicles that you can invest in that are going to give you a steady return that is not this, overly speculative market that we're currently living in.
So we're back to the monetization. We're about to, how are they making money off of the money they're being given, and how long will it take for them to do that, and how long will it take for the infrastructure to completely be built so that they can do that monetization? So it's like, is the cart before the horse, and are we patient enough to wait that long? So it's yeah, it'll eventually happen, but what do we do in the meantime? I think even OpenAI now is looking at, this could be wrong, so don't quote me, but I almost feel like I heard $500 billion that they have promised in various deals with these different companies. And it's like, are they going to be able, if those companies, if any one of the companies goes under, then that's going to affect everything else. So that's where the whole domino effect could happen. It's just, will we get our infrastructure built quick enough? And I hope there's some companies out there, that are speeding that up, because and then to have the energy out there to accommodate that as well. So I mean, there's two different things out there that are going nuts that have to happen before all these promises can be made and monetization can happen, and then we'll usher in the quantum era after that in 4 years. So it's really interesting. I think that's why it's just a matter of timing for everything. Just like any chart you look at, it's timing.
So, but I think, it kind of, to your point, I think it's kind of why the administration's so hung up on the Fed, and like even just a quarter basis point. I know it seems, it's like a quarter of a percentage point. Like it seems insignificant when you're talking about trillions and trillions and trillions of dollars that are being injected into this. That translates into a few $1 billion, and a few $1 billion is a significant number that gets reinvested, and to deploy into all of these data centers and all these build outs and all of these hyperscalers, that is just going to continue to fuel the fire. And you can keep it running as hot as long as you can until that liquidity runs out.
Yep.
All right.
Royce, you want to say something?
I got a lot to say, but I'm going to try to keep it simple, because basically I think a little bit different than most. And when I consider a market, most people consider a bull market is basically you seeing the price of the stock go up, and it's constantly going up. And inflation is basically also driving it up, so it makes it look like it's going up. But everyone doesn't realize that you can still have a bull market that is technically a bear market that's still making it a bull market. Meaning, let's say you're not buying the stock, but you're selling cash secure puts, which means anyone who basically doesn't want the market to fall is buying insurance policies saying, just in case it does, just in case it does, just in case it does. And there are too many people sitting on those cash secure puts saying, yeah, we won at that price. So it means you have willing buyers at that price, propping the market up and higher and higher and higher. And they're selling options every single week. And so it's not even, but if you look at it very conservatively, you can actually watch the pendulum swing from people who own the stock to people who want to buy the stock. And I think where we are now is not at a place where people are outright holding the stock. They're selling mostly cash secure puts and saying, yeah, we're willing to pick it up at this price. And that's literally propping and holding up the market as it keeps marching higher and higher, because every time it jumps at all, people are selling more puts underneath saying, yes, please. So it means those flash crashes, that just means everyone underneath just picked up a whole bunch of shares, and that consequently makes it go even higher. That's why it can bounce so quickly.
Not to mention the hedge funds that are throwing in shorts. And so then if it keeps rising up, they have to eventually buy the stock.
Even a short also means that when you sell back that short, you're willing to buy the stock, so it looks like buy value.
Yep, exactly. I'm agreeing with you.
So a lot of people don't think about a bull market. There's a lot of things that contribute to a bull market. And if everyone is betting against the market, yes, it's going to keep going higher. And only those people who bet against it and who put in those shorts, who said, yes, I'm willing to take that risk if it falls, are making money that they can pull off daily, weekly, monthly. And meanwhile, you have the buy and hold people who are only getting maybe a third of what's actually going on in the market, because they only get money when they cash out, when they take profit on those one set of shares that they own.
Yep. Yep, make money up and down, and that's keeps propping up the 7, the Mag 7, but a little bit more than that now.
Yeah,
but
it's price discovery
you look at
dynamics at
NASDAQ.
its best, and auction dynamics and fundamentals at their best.
Oh yeah, it's definitely options market.
Greed
for sure.
versus need.
Yeah, I haven't seen that meter lately. The extreme greed meter. I wonder where it is. I'll bet it's in that red. I haven't looked it up lately. It has to be in the
Max
red.
Payne, let's go.
Yeah. Well, apes don't like Max Payne.
I love that game.
We have a long history with that Max Payne. All right, let's a little fun fact here that he threw in. Daniel did, and it's status of today for sure. Is that there are 19,000 private equity funds, and there's only 14,000 McDonald's in the U.S. So, I mean, that's a fun fact. It is growing, and obviously everybody's running to private versus, I get what's the opposite, public? I guess I don't know. What would you say the opposite of private is in this situation? Just your big houses. I mean, I don't know.
Yeah, everything that's publicly traded that has to get audited quarterly and pay for it and SEC regulate.
Right. I think that last word was the biggest reason. You know me, the regulation.
Regulation, yes.
Or lack of
regulation.
We can do whatever we want. I've already talked about Wild Wild West. Let's go to labor. Let's go to labor. That was a lot. That was a good talk though about all of that. So let's move on to the labor.
Hopefully we learned something.
Yes.
Like about the letter N, Daniel. N.
I got it before we started, okay?
Yes. I thought he would never get it.
I still don't know that song though.
You're never gonna get it, never gonna get it. Come on.
Yeah.
He's too young. He's too young. I mean, that was what, 80s?
Yeah, that was 80s.
Yeah.
That wasn't even a thought then.
Yikes, that makes me feel ancient.
Just being honest.
So this is one you brought into play here, Josh, right? About labor. I mean, it's because the Fed always changes what they're measuring and what's important to whatever fits whatever agenda they're doing that week, right, Josh? What are we doing?
Oh no, this is definitely a Daniel thing.
You want me to share some numbers?
Sure. Let's go with this. I'm sure Josh has some words after that though, but let's go.
Also, can you hear me okay? Because my headphones are being all weird.
Yeah, you're good.
Yeah.
Okay. All right. So as we all know, the government shut down, which I personally think is a nothing burger because it's not the first time. Definitely won't be the last.
8 days.
It is concerning though, potentially on the timeline, because normally it's comes back pretty quick, but we'll see what happens. So with that means no government data, which Darin doesn't trust anyway. So all we have is the private sector data for jobs. And so ADP reported last month that the private job sector lost 32 jobs, and they revised down their August number to a 3K drop, and they were expecting a 45K increase. And most of these job losses have come from small companies that have under or 500 employees or under. And then as well as Indeed saw that the job posting levels are the lowest they've been since February 2021. So, kind of what we can gather from this, and of course we don't have the official government data, which would, probably be revised. I mean, even this ADP data was revised, which I actually find quite shocking that ADP doesn't even have accurate stuff. Like the fact that all this stuff isn't on the blockchain and just we know it is kind
stop
of
thinking
ludicrous.
21st century. Let's go back to 1985.
I know, God forbid we get off pen and paper, but anyway. So
employee of International Paper at one point, I do not condone that.
Well, you started a tech company, so I think you do.
I did. And I have paper. I have paper.
I have none. So I think this is interesting because it shows a potential, or I should say, the continuing of a weak labor market, which is the reason that Powell cut last time. And I do think the bond market is pricing in another cut come this month. We'll see. Do they cut zero because There's no government data for them to go off of. I'm sure they have stuff to go off of. I see Royce smiling, so he probably has an opinion on that.
I say nothing.
But, you know, that,
I will say it.
But, you know, I think this is one of those indicators of, you know, continuing weakness will get rate cuts and a potential continuation of that K-shaped recovery that I think we talked about last week of, you know, stock market continues to rip, but the actual underlying economy, because the economy and the market are separate things, are it's not so hot under the hood.
Yep. My only input before is that this whole government shutdown thing, there's something happening while it's shut down, and there's a reason that they don't want things to be released at this point, and so I think before it does open back up again, that some things that we don't know about yet have happened and will happen. And it'll be interesting to see. That's all I'm going to say. That's my tease.
I think you give them too much credit, Darin.
I think this is planned. I think you have both the Democrats and Republicans planned this. They have to play good cop, bad cop. That's what they've been doing for years. You got your deep state that's going to. They're the ones that are going to rule. What?
What about the Green Party?
Green. In 100 years, no, I'm just kidding.
Don't discredit those guys.
That's all I'm gonna say. Josh, did you want to have any comment on this, since you did do a little comment on?
Well, no, it was really more of a, I guess, just a question to the panel. Would be more like what do you think? What do you guys think this actually does? Like, because the way I kind of see this going is with, again, to Daniel's point, that K-shaped recovery. Like, are we saying you're seeing the top get heavier and the bottom get weaker? And we're, you know, the actual job market softening, so people are going to start looking for jobs, and we're seeing a record. I mean, we've seen more in small and medium businesses. We've not seen a rash of bankruptcy filings of this magnitude since like 2010. You know, it happened a couple of years before 2010. So we're seeing a little bit of a softening from the slowdown we had in 2020. 2021, and then again in 2023. And so now that's going to catch up. Like, what are we going to look at 2 years from now? And are we going to start seeing, you know, a lot of the, you know, big rash in M&A where these bigger companies start scooping up these smaller companies, and we kind of get, you know, again, a little bit more top heavy with the, I don't want to say monopolies, but that's kind of feels like almost where we're going. But I mean, or is this just is the labor market going to get so bad because of all of this that it ends up kind of torpedoing us into a recession almost? And I mean, if you look at some of the analytics, a lot of states individually, not the U.S. as a whole, but a lot of states individually are already in what's considered to be a recession. You know, like here in Florida, we're actually on the up and up, like we're actually in expansion, and there's some places in like Texas, but you know, what happens if like a California goes into, you know, shows flashes of a recession? I mean, that's the world's third or fourth largest economy. That would have like devastating ripple effects.
California, New York. I have a feeling that's where some ugly stuff's gonna.
Only if you hit panic, in my opinion. It's like everyone wants to run into the theater and yell fire. But if you don't and you see the smoke, everyone proceeds out safely. You don't have a recession. You have that, what's that, soft landing, that whatever.
Or no landing, yes.
Whatever you want to call that.
I think the issue is that, though, is you're assuming humans act rational, which is why PhD models don't work.
Right?
Yeah, true. Did you have more to say, Royce, or move on?
Oh, no, I'm gonna I guess leave it at that.
Okay.
I don't think that it's going to be as bad as a lot of people think, but as long as they keep feeding you something to entertain you and distract you, it'll still work. It'll still work.
Are you not entertained? Yes.
Are you not entertained?
Here, I have a fun.
Texas is independent of the grid and can secede anytime that they want. They have their own power. They have their own stuff. So, hey.
They've threatened that before.
The rest of the country goes into recession. Texas says, not us. We're no longer part of this mess. We're out.
And then we'll move to Texas. No, I'm just kidding.
Are we moving? I would say.
Hey, I have some place you can stay if you get down there.
That's right. That's right. Just as long as my exes aren't there. That's another song I won't sing.
I made my home in Tennessee.
There you go. He finished off the lyric for me. Those two do connect in that song. Let's go on to gold. The crazy gold that's going on. The gold is over 4,000. It's 42. I mean, what is it? I mean, what's going on? Or 40? What it did reach 42 or no? I forget what the high was.
Just above 4,000.
Yeah, I don't think it hit 41 yet.
Not 41 yet.
5% more. We're almost there.
Hit like 49 or something.
So, Daniel, what's going on with this record gold? I mean, we kind of talked about it before, so we don't probably need to go crazy with it. But what kind of new stuff you got for us?
Yeah, so I mean, obviously, it once again hit its all-time highs. It's had its best 12-month return in 50 years. If you look at it from like a traditional technical analysis on a monthly chart, the RSI has hit 90, which is like pretty insane. Like most stocks don't do that on the monthly. Like that's a pretty telling sign of like things are getting real top heavy. And this is the most overbought it's been since 1980. And if you want to go just look at a gold chart in 1980 when it, did that same thing, it was a very forward-looking top indicator, we'll say. And so, pretty much like the article I was reading, it talked about how gold has outperformed like the S&P, Bitcoin, even NVIDIA over the last 12 months. And, everyone is talking. So, yes, yeah, well, Royce has. And, everyone's talking about how, the rise in gold is because it's the debasement trade of the dollar, loss of confidence in the U.S. government. But if you look at the dollar, it really bottomed, I don't know, let's see, it's been in kind of this trading range since June, but gold has been ripping that entire time. And, my question maybe to Royce, and then, the rest of you guys is like, you guys, think that gold, and I know there's actual like, government flows, like China's been buying gold like crazy, but do you think that this is an actual, like the beginning tell of the way, the like true move away from the dollar, or that this is partially the debasement trade, but CTAs are just following momentum into this and just like driving it higher. And because it's going higher, they have to buy because of their models. And this has just become an exacerbated move, and it has nothing to do with fundamentals anymore. You can start with Royce.
Okay. Just make my turn because I know typically, But to that point, but gold and the dollar are now moving up, Daniel. So
that's true.
Does that mean things are going to equal out? Does that mean that things are going to equal out and basically the dollar's going to start to go up as gold starts to come back down if this is a top? Because we said that the dollar bottomed out around June and basically it's just now starting to pick itself back up. I think there's probably going to be a little bit of an equilibrium or a trade-off. As we see the dollar rise, we're going to see gold probably level off about 3,200. So I'm expecting it to lose about 20% of its value, which also should be happening right about the time the market loses about 20% of its value. That's right. I said that. All right. And the only way, and if you look statistically and historically, not at our seasons, because Daniel broke everything this week, but I'll get over that.
My model broke.
But statistically, whenever the market declines, the dollar gets stronger. So if the dollar is starting to move up and gold is also moving up, now we want to see who's going to be playing chicken with the market. So does that mean stocks may rebase against the dollar, against gold? Because as the dollar deflates, that means your dollars actually buy more, which means the actual price that you see on the ticker, they're worth less because the dollar is worth more. And that hurts a little people, sometimes hurt people's heads to think that, wait, what I can buy more stuff with 50 cents than I used to be able to buy when it was 75 cents, because that 50 cents is actually worth more realistically than the 75 cents. Inflation makes it look like it's more money when it's actually not more money. So to sum it up, I do think that a lot of people are putting a lot of their faith and trust in gold. And I think a lot of people are finally saying, okay, well, gold is now quite high, and that used to be a standard. And every 35 to 50 years, the reserve currency does actually shift. So is it going to shift away from the dollar? I don't think so. I think there has to be a price discovery that needs to happen. And somewhere in between there, the index for the dollar is going to probably go from about 98, maybe to about 115, as gold goes from about $4,000 per ounce, maybe back down to about 32, 33. And then guess what's going to happen? It's going to spike again. So is this going to be the base or the bottom for gold? Not by far. I'm actually expecting it to see gold probably around 2027, 2028, somewhere around $4,000 to $5,000 per ounce. But there has to be a pullback. And I do want to see the dollar go up from about 98 basis points all the way up to maybe about 115. And then it's going to pull back probably about 105 and then probably go up to 125. So a strong economy means that the dollar will be stronger than the stock market. A weak economy is when you see the stock market constantly rising without end.
I would say, actually, based on Daniel, what he said, then Goldman Sachs agrees with you, because they adjusted their upper end to 4,900 an ounce for gold. Didn't give a timeline, or did they? December
2026. Yeah.
Yeah. See, now that's their retail, trying to get retail to jump in so that they can get money from them.
So what's my angle then? What's my angle?
Your angle? I mean, you just did the broad macro of it. I mean, I don't think you have an angle. Okay. What I'm saying is Goldman Sachs has an angle, because they're making that timeline 2026 December, and you're saying down the road possibly. So I don't know. I mean, I do know that they're yelling about it now, which means that whatever they've done, they've already done, and they're just waiting to make money off of it. So we'll see. I mean, if this is the top, 4,300 an ounce is what their target was, and it got adjusted to 4,900. So now it's to me, whenever they do that,
Bitcoin 100,000, Bitcoin 100,000, Bitcoin 100,000, it got to 95 and then tanked back to 17,000.
Exactly. Rug pull. Yep.
So them calling 43 anything, run like hell.
Exactly. That's my point. You said it better than I did, but yes, that was exactly my point on that. We got a couple of more things to do real quick. We've got the tales of Tesla. We haven't talked about Tesla in a while, so we can revive that subject here. I did see, and it was part of my three things, is how Tesla has done well based off of, well, there's two things going on right now, and I'm not even looking at the notes, but because you have the credit, which went away, so people are trying to hurry up and get that credit for Tesla before that governmental $7,500 was offered, a tax credit. And now you have the newest thing, which is Tesla finally got an under $40,000 Tesla they just announced. It's 39 something. So give me the rest of you said tales of Tesla. Did you mean TALES, or are like a dog has a tail? Which is it there, Daniel? I'm trying to see if it's a play on words.
Story.
Yes.
No. It's like, they're like stories.
I got you. Okay. So go ahead and give it what data you brought, and we'll let these two guys
talk about it. Right. I didn't hear that right. I heard what daddy you got. What?
That is not what he said.
Data. Not karaoke yet. Come on, stop.
Yeah, all right. Well, this is what Daddy brought. All right. So he brought some facts and figures. So Tesla had its
Papacito.
Yeah, best quarter, with deliveries up being 29% for Q2. But when you actually listen to them talk about it, that was just people front running the tax credit ending for EVs. And they, kind of a few days later, as Tesla tries to kind of get around that, they released that they're going to have cheaper Model Ys and Model 3s that were more just stripped down versions of the Model Ys and 3s. But the market sold that news because it was pretty lackluster, and I don't even believe the reduction. I think the reduction in price for those models was like $4,000 or $5,000, but the EV tax credit is $7,500, so it doesn't even quite match what the tax credit is. And I've kind of read mostly on Twitter that the future potential of Tesla rides on robotics and the autonomous kind of like taxis, and actually has nothing to do with the cars. And so I wanted to get your guys' perspective on, is Tesla a hold for now? Is it, let it kind of die off and buy it later because, they're going to have maybe a rough few years? Because if we know anything about Tesla, they promise things early and then they maybe come about 2 years later, right? Which is fine, because Elon does do what he says, just, his timelines are a bit ambitious.
Have you ever tried running the company?
I'm not knocking the guy. I just want to know if I should sell my gains and buy back later when it's cheaper,
Hey, you can always switch to that other type of bull market I was just telling you about.
Yeah, but
I've got one word. Exactly. I got one word for the Tesla thing, and that's robots. And I will move on to Josh, let his opinion, then let Royce wrap it up on Tesla. Then we'll move on to the chart.
You can just, the reaction's pretty obvious. Like if you just look at what the price action was when they did the teaser on, I think, either Friday or Monday, and then when they actually released the models, it was a big nothing burger. They just Tesla, I made the joke before, but it's a very promising company because they just keep promising, and yet they just and nothing actually comes to fruition. And even the stuff that they do, it wasn't fun, it wasn't sexy, it wasn't anything enjoyable. It was a stripped down, dumb version of their existing models, and they tried to kind of make up or compensate for that $7,500 EV credit, but they really only knocked like $5,000 off the existing model's price. It wasn't like you get a base model of the Y, and then you get the base model of the the other one. I forget what the other one they actually released, but
the 3.
The 3, thank you. It was really, it didn't make up for the EV credit. And there was nothing fun about it. What they stripped was the enjoyable parts. Like you get into a Tesla, you got this cool touchscreen. Like that's a fun selling point. And then now that's just, if I'm not mistaken, they've actually removed that to where it's just a screen. And so that it sucks a lot of the fun out of it. And it's just like, I think they took out like the seat heaters and no auto steer. Like you can't do the self-driving or anything like that. So, you really just have a cheap EV, and that's not really that exciting so it was a lot of buildup for basically nothing. It might be great for some Uber drivers who want to, lower their overhead. You see a lot of Uber drivers that will, rent or lease Teslas and go through and but anyways, like I said, it was just kind of a whole big thing, and the stock price kind of reflected, I think, the overall expectations and then the actual, delivery.
I have some clarity on that. When they promised that price, that low price point, we were in a different economic world where things didn't cost as much because of tariffs, et cetera, et cetera. So when this actually came out, it's still, if you put it, I think that was in 2016 is what I saw, is when they promised the cheaper EV or something, when they set the price.
$28,000 one, yeah.
Yeah, so they couldn't deliver that because of the economy scale that has gone to inflation, the tariffs, and everything else. So if you pulled it back to when they promised it and used that year's dollars, it's still 22% less, which is they're trying to justify that. That's why.
You say that, but it's not like Elon didn't basically run the government for a few months.
Yeah, I mean, he doesn't run the world though. But yeah, you're right. He doesn't run the world.
No, but
Congress, it's coming.
But he's buddy with the guy that does all the tariff stuff. So
I don't think they're friends anymore.
Yeah.
Yeah, he has his Trump coin now. They don't have to be friends anymore.
I don't know. I thought they kissed and made up.
Why can't we be friends? I mean, it's karaoke. Let's move on to. I don't. We're not going to talk about the OpenAI and AMD because we did that earlier. So there's.
Hey, where's my chance on Tesla? Get out of here! Come on.
I'm kidding.
Yeah, moving on.
I know you want to talk Tesla.
Motion
Royce,
to dismiss.
Yes. Please wrap this up, Royce. I know that I was kidding with you. I know you.
Oh no! I'm going to show you crayons.
Oh, we're going.
We're doing crayons on
Tesla.
Let me get
Tesla.
All right, hold on. Let me set it up here. We've got the After the Bell crayons and charts with Royce Wells, and as he said, we're going to talk about Tesla. Boom! There it is.
Boom. So about 5 or 6 weeks ago in the seminar that I put out there, I said Tesla around September or right at the very first few days of September, last day of August, that Tesla was about to make a run for it. If you guys listened around then, it was around 326 is where I actually started selling my cash secure puts, and I was going deep in the money trying to get at least $100 out of that. So I sold 327, and basically at about 430 is where I had my cash secure put. Sold 10 contracts of that, and guess what? That made me $100,000 in 5 weeks. Why? Because you can. I used that as collateral, willing to pay more for Tesla, and all I did was use the system to get us there. Where do I think it's going to pull back? Is it going to go any place further? Is it going to actually make it to 536? Let's go take a look at these other charts to take a look.
That was the weekly.
That was the weekly. So from where we are, the daily hasn't ran out of room. So that RSI line that's been slowly, basically did a little dip, came on down, was able to hold it through all of August, all through September. Waiting when September begins, we got all the way from the beginning of September all the way to where we are now. I want to see Tesla hold right at about 437.58. And then if it does hold from there, I am expecting overall this guy to go a little bit higher. Also, there's a new end of trend indicator that I'm not showing you guys on this seminar, but you probably be able to catch it Sunday if you catch us, every Sunday at about 3 or 4 o'clock. Teaser, sorry. But I do think, let me bring on my dashboard real quick. Let's see, get rid of that. I do think that overall, from where we are on this daily time frame, there is a very high chance that we will be able to see 510 before we get to Christmas. So if you're willing to play and you're willing to do something, absolutely go there. If it, however, fails and turns abruptly, suddenly, I'm going to turn on the 3D indicator and say, hey, if it fell, how far can it go or how low can it go? I'm expecting if we were to fall suddenly between 413. So from where we are all the way down to 413. And if we were to rise too quick and rise too fast, somewhere around 441. So only about $3 if we try to go too quickly. But that's why we've been cooling off since that very large spike that got us to 470. We've been cooling off, allowing ourselves to give ourselves some more room, allowing probability to expand, because basically it was right here and it's been gradually riding up. So that means fastest is another $100. Let's go down to the 4-hour chart to see if that's even possible. From where we are here, once again, 3D is saying, hey, 537. That looks like a very good, consistent beat on this guy. So if it were to suddenly take off and do it multiple days, 547 should not be that much of a stretch. And if it were to suddenly sell off, I'm not expecting it to get much past 396. So do you think Tesla's going to die? I don't. I think it's going to keep on going. There may be a little bit of turbulence, but overall, I do think that 537 somewhere around Christmas is more than achievable. All right, back to you guys.
All right. Yeah, it looks like we're hitting 437 after hours, so it could either pop up or drop below. That's a channel there, a little small, narrow channel on that 4 hour. It's squeezing.
It is squeezing, but we like squeezing. Squeezing is good.
Yep. Yeah.
It ain't easy being squeezy.
Loving, touching. Never mind. Not singing this journey. I did. So that was our chart, and that was after the bell. Crayons and charts with Royce and Elon Musk. I mean Tesla. And
I didn't even say the E word, not even one time.
You didn't, but we like to say it. Let's move on to the most important part of the broadcast, which is the results of the chart. Let's see here. We've got who won this week? I'm trying to figure that out.
I wonder who.
Just barely, I think. Barely got away with it. I'm not sure.
You know, I'm talking about easy being cheesy. Look at this guy.
Yeah. And people
belaboring the event. Come on.
Hey, I think we need to talk in depth about this.
What?
At least for 15 minutes, and I had to actually change the scorecard to reveal that very rare event that happened, which is that I actually won, and it wasn't even close. It was like $8 or something above. It basically had a breakout week, just like a lot of those stocks did. They were moving in tandem, and they're actually starting to move down in tandem. I was like, come on, 3 o'clock. I don't need any crazy things to happen. So if we're looking at now, looking at the actual after the bell and scorecard, and you see Josh with 4. I finally contributed with 1. I'll just say that I now am responsible for 20%. That sounds better of our wins. And then we've got Daniel. Daniel is.
I hate to tell this to you. Let me stick to the math.
20%.
1 out of 5 is 20%.
I thought he had 5.
He has 4.
Okay, maybe you're right.
Okay, see, I'm math too.
20% of the overall. If there's 6 on the board, that doesn't break out to even 20, sir.
I said hour, which doesn't mean.
So I'm not included in that hour now.
You're not part of the hour. You're on that other side over there. The hour.
I was gonna say, am I on my own team now? Like what?
No, I'm not saying that at all. I'm just saying.
Why we're look at it. Look at
team, but look at this guy flow showing.
Royce, come to the winning side. Never mind. We got Darin and Josh, which are the apes, are at 5 now. Daniel looking for that first win, and Royce has got 1. So we'll see. I mean, unless things change, we might get 2 in a row there.
I'm thinking season 5, Josh, me and you all day.
Oh, they're gonna switch our teams. Dang. All right. Well, we'll get back here. So this week, Josh, I gave you the 3. I kind of consult with my my guy there. I had OpenAI, Amazon, or RGTI. Did you decide which one we should go with? I kind of was most interested, honestly, in the either RGTI or Amazon. So what did you? What say you?
RGTI is interesting. It's just very volatile.
Yes.
I mean,
it's what makes it fun.
It's honestly it's because it's sitting like really on a decision-making spot. So if you want
So let Royce be give his input here. Let me get over to the charts. I see he's pulling it up over there. So let's do that.
I'm looking.
I had to get my exactly. Okay. This is a with the in tandem type move, just like the other quantum. It didn't go down though like the others did. So interesting.
I mean, there's an obvious direction, but it's just how much.
Interesting. And how obvious?
It's so tight where it is, though. I mean, it's so channeled.
Okay. And this look. Do you see the range on this thing?
Yeah, that's what I'm talking about.
Yeah, when you go down to the day, absolutely.
Like a $30 range.
This is dumb. All right.
I mean, almost a 30.
All right, so this or Amazon?
Y'all get the choose.
You might as well. It's going to be a crapshoot, so you might as well just go for it.
All right. I select RGTI.
Okay.
Officially.
and go first. Go ahead. Go ahead.
No, you're going to give your stuff. You're going to give your analysts like
every
week. You give us the channel though. No, you give us the channel.
Wait, he's been with us for about 2 years. Go for it, sir. Give the
range.
No.
No.
I want to see. I am testing your ability to analyze now.
That is not fair. I'm not ready for that. I don't take the classes. I'm the social media guy. I don't take the classes like everybody else around here. I don't get that education. You say, well, you should watch Sundays then, right? That's what you're going to say.
Yep.
I don't know. I mean, that the range that you speak of is what you want me to come up with?
Yep.
I'm going to get.
I want to see how good
on the video. I'm going to get critiqued because you have not done this with anybody else. You have not done this with anybody else, and this is my penalty for winning.
It should be an honor. It should be an honor that I give it to you when you win, no less. I had to wait.
Penalty for winning. My penalty for winning
to get you to win once.
Oh, you don't want me to pull that up now? I was hot at the end of last season. No, you don't want me to pull that up. All right. Let's see. Range wise, I mean, we'll go $10 up to 53, and we'll hop down to possibly, I'll say 40. So 40 to 53 would be what I'd throw in there. So now tell me why I'm wrong. Huh?
Okay. I said not even round numbers. 23?
Yeah. No, why you pick 53?
I'm not setting it. I'm actually just giving a generalization. I'm not setting the channel for us. No, absolutely not. No, we're not changing that rule up.
Why not?
No. If you want to do that kind of thing, we'll start it next season.
20 is a very realistic possibility.
20 is very realistic. See, that's management material right there.
If I had to guess Royce's range, it would be 50 to 25.
Yes, nailed it.
Yep.
Okay. So we need to go $24 difference. So we can all have $6.
6 1/4 between the two. So
yeah, it'd make it easier for 6.
So who's going to give up that $1?
On which side, though?
It can just be 26 to 50, and we'll all be happy and not have to worry about,
Okay, fine. Let's do that.
If it's
now,
below,
I'll set the ranges
record,
now.
If that's the case, if it's below 26, he gets -1 pip.
That's fine.
A guy wins, and you see what kind of hassle I get around here. You see this?
And if he does, I'm giving it to Daniel just to make the universe right.
It ain't easy being on top, Darin.
Yeah, but I haven't. But that's the thing. I'm not on top. I'm like the K.
This week you're on top.
Recovery, I'm at the bottom. I'm not at the top. These elites here. I'm not up with the elite. I'm at the bottom, and I'm getting stepped on by everyone just because I had my one win.
So we're doing 50 to 44.
26 to 50, right?
I'm just going from top to bottom.
Yes. So yes.
50 to 44.
Right. 50 to 44.
So, but you also
44 to 38.
44 to 38.
Okay, but you did not go through like you do every week.
And then
32 26.
Are you listening? He just did like the
he did the range.
No, he didn't.
Are you listening, Darin?
No, he didn't go through all the charts like the weekly and the daily and all that.
Did you not see?
You just weren't looking.
Because normally he does it while I don't have to set this whole thing up.
Oh dear God, it's taking forever.
All right.
And this is why we don't let him win.
I was just about to say that.
I didn't do it on purpose.
You know what? That gives me more incentive to win, just so I can make you guys mad. All right, so here we go. And my teammate even. It's like my teammate's not even backing me up here. What's this about?
I would have like 5 minutes ago.
Okay. So here's what I'm going to do. Here's what I'm going to do since I get to pick. Josh, you're first. I'm going to go second. How about that?
Oh, I'll go all the way to the bottom.
Mm-hmm. So 32 and below. So JPM.
Yeah, right. 32 to 26.
And I'm going to obviously pick the next one up. So I'm 32 to 38. Strategery. All right, and
I mean, the thing is, though, like, all right,
even though he was all over me about this, I'm gonna let Josh. I mean, let Royce go first.
Like, this could backfire. It could very well deflect and go up.
Okay.
I'm just gonna call out. Hate it. Really do hate it. 44 to 50.
Okay. And he hates it though.
I hate it.
I don't.
But does he really hate it, or is he just saying that? That's what we have to go through every week.
I think this might be the one time he actually does hate it.
He's smiling kind of big, saying, "I hate it." I don't know.
If that happens, I will.
He's got that Cheshire cat look. Well, I mean, there's been some crazy stuff going on. So, all right.
I mean, this stock does have an ATR of 8%, which is fucking insane.
Yeah.
So yeah.
Nice. It was last to go. The other two,
and that means it starts in Daniel's range, which is good. It starts in Daniel's range, and there's a
with a stock like this. I don't know if that's good.
It starts.
All it takes,
which means we have a $5 buffer, sir. We have a $5 buffer for you.
Hey, all it takes is for OpenAI or NVIDIA to go, we've got a deal with RGTI, and there it'll go. And that could be on the horizon. Who knows? That's all it takes nowadays.
You kind of see what it does in that $39 range. And
All right, guys, let's wrap this up. It's about an hour in here, I think. So let's head out and have a good week. See what happens. Does the government open over the next week before we're back? Is that going to happen?
Monday.
Yeah, possibly Monday. We'll see. I haven't heard anything today, but will all the secretive plans that have been going on? Of course, that's what I'm saying. While it's closed down, will more jobs be lost in the government? Blah blah blah. What all will happen in a week? And right now, a lot could. So we would definitely will have plenty of material next Wednesday. Something tells me even more material than this week. There'll be plenty to talk about, plenty to write about, and we will see everybody back this time, hopefully, unless arbitrage trade business continues to pull Royce away for good reasons.
I'm just going to pre-call it. NVIDIA's my pick next week. See you next week.
There we go. You said it. You said it. You heard it right here. So we already know then it's going to be NVIDIA is now has a deal with RGTI. That's what's going to happen. And then next Wednesday is really going to suck. All right.
Sounds like I need to buy some RGTI.
Yeah. We're not suggesting that.
Too bad it scares the shit out of me.
Like teenagers. Oh, I know.
All right, guys. See you next week. See you next week.
Later.
Bye.